How to grow a small Forex account, part 1 of 3. Hello and welcome back to Bunnex Investment Group. This is an ultimate guide to trading a small Forex account. To make things clear, this is not one of those videos on YouTube where people risk a $20 account to make it a $1,000 account in one trade. We are going to run through a 3-video series where we will design a model that is practical and applicable to grow a small Forex account. With that, this is not a get-rich-quick scheme, but something that will require determination, patience, and consistency to make it in Forex trading. Before we jump into the whole video, make sure you hit that subscribe button and check the notification bell icon so that you'll be notified each and every time we upload a new video. Please check out our free Telegram channel where we share free signals, trading advice, and support. The link is in the description below. So here's what we'll go through. As mentioned earlier, that this is going to be a 3-video series. We are going to segment the concepts into 3. Note well, for this small Forex account business model to work for you, you need to watch all the parts and understand each and every concept. Below are the topics we will go through. We are going to define what a small Forex account is, give you the motivation to grow it, risk to reward on a small account, the R definition, pairs to trade on a small account, then small account intraday strategy, compounding and growth techniques, then trade management, which is basically a stop loss trailing technique, then last but not least, small account trader's mindset. So here's the definition of a small account for this business model. To remove all the confusion, we need to clarify by what a small account means. This is because what someone may see as a small account is big to another, but in the Forex world, we have some sort of a data. In this video series, we'll use $100 as our small account. However, the model we will illustrate can also be applied to an account greater than that. If you search on Google, how much to start with in Forex trading, you will mostly get results that calls for 4 or 5 figures. Although growing a $100 account is highly stressful, it is achievable. $100 doesn't buy much these days, but if you want to trade Forex, it can get you started and can even generate a new source of income you can earn at home. If you manage to understand and implement, I have highlighted these 2 words. If you manage to understand and implement what we will discuss, then your first $100 account can ultimately change your life for the better. So the key to success as a trader consists of having a viable trading plan that you can easily stick to no matter whether you are trading with $100 or $1 million in your account. So the trading plan is the small account business model that we are going to impart to you in this series. Risk to reward ratio. This is the most important factor in trading, no matter it's a small account or a big account. No matter it's Forex, stocks, bonds, shares, any tradable asset, you need to apply reward to risk ratio. Let's take for example, if someone says he got 50 pips profit, this is only one piece of the story. Why? Because the key piece of information that is missing here is how much he has risked to make this profit. A 50 pip profit is a good result if he had 25 pip stop loss, but if his stop loss was 200 pips, he risked a lot to get a relatively small reward. Let's take for this as our example. Let's call this trader A and this trader B. Trader A enters at this point and puts his stop loss at this point. As you can see, his target is twice the size of his stop loss. Therefore, in this case, whenever he loses twice, he can cover his losses with one win. This is what we call a 2:1 reward to risk ratio, whereby he is getting 2 parts while risking 1 part. This is the software that we are trying to impart to you, because on a small account, most people are coerced to trade in this way, whereby they are skeptical of losses or even afraid to take some losses. Therefore, it will result in them putting a way bigger stop loss that they think or that they feel will not be reached by the market, and a very small target that they think the market will quickly reach. Yes, of course, this might work for a certain period of time, but on this small account business model, we are talking about something that you are going to apply over and over again in your trading career. So having this can even allow you to have 10 correct trades, but only one wrong trade would take away all the profits of your previous trades. So how will you feel by wiping all the 2 months, 3 months work in one day? Something very, very embarrassing. So with that being said, on this small forex account business model, we are going to go with this style and shun this forever. So the first software that we want to install in yourself is risk or reward to risk is much more important than pip value. The R. So you're probably asking yourself, but if not with pips, how can we measure returns? That's where the R and the R multiples come into play. R stands for initial risk. The initial risk is how much you are willing to lose on a single trade. Let's say for our small account model of $100, we are going to risk 5% of our account, and this means our R will be equal to 5%. This is in terms of percentage, and in terms of monetary value, this can be equal to $5. So in our terms, we may say if our stop loss is hit, you have lost 1 R, and if your take profit is hit, you have won at least 2 R, 3 R, 4 R, 5 R, depending on your reward to risk ratio. What we are trying to mean is the R is the amount of risk between your entry and your stop loss, and your target should be at least multiplied by 2 this value. So all profits and losses can be expressed as a multiple of the initial risk R. So our major goal is we want our losses to be 1 R or less, and our profits to be 2 R and above on our small account. So the formula to get your R multiple will be initial risk. Our initial risk for our account model is 5% or $5. So the R multiple will be equal to the profit or loss that you have obtained on a particular trade divided by the initial risk. Let's take for instance, on our $100 account, we have entered a trade. After entering a trade, we have the trade has hit our take profit, which is $10, and our initial risk was $5. So our R multiple can be obtained by dividing 10 divided by 5, which is 2R. We would say we have won 2R. Since we can express the result of every trade as its R multiple value, it also becomes easy to calculate the R multiple sum of many trades. For example, we had 5 trades last week. Trade 1 was negative 0.2 R. It means we actually cut the loss after we saw violation of our setup. That is why this didn't reach 1R, minus 1R. Then trade number 2 was a win, which is plus 3.2R. It was a very good reward to risk ratio trade, whereby we had 3.2 multiplied by our initial risk. Then trade number 3 was a win, which we had plus 0.94R. It was a trade that hit our trailing stop, and our stop, we were stopped in the profit side. Then trade number 4 was a trade that actually hit our initial risk or our stop loss, which is minus 1R. Then trade number 5 was a break even, which resulted in 0.0R. So by adding up the above values, we can then say that our total profit for this week was plus 2.94R, meaning that plus 2.94 multiplied by the initial risk of $5 was our profit. So why are we talking about this information? The first thing that I would like to say is make sure you understood all the above concept. If it needs be, repeat the video because we'll need it in the following parts of the series. We are going to need it in pairs to trade on a small account intraday strategy, compounding, and growth techniques, and then trade management, which is basically a technique of stop loss trailing. So make sure you've actually installed all these concepts, the risk to reward ratio, the R and R multiple, because in the next video we are going to be incorporating those concepts. So make sure I repeat, you have understood it. For the perfect broker for this small account model, I recommend HOTFOREX because of the number of assets, of trading assets that they have, as well as their spreads are okay for a small account. So you may check and open an account with them using the link that is in the description below. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.